Big news for Toronto real estate, sales are finally surging. October brought a game-changing 50 basis point rate cut from the Bank of Canada, following a surprising drop in inflation down to just 1.6% for the month of September. Now, could this be the turning point for the Toronto real estate market? Let's dive into the data and find out. Before we get started, I'm Jay, your trusted GTA realtor, here to bring you the October 2024 Toronto real estate market report. Now, I know navigating these shifting market conditions can be difficult, but I'm here to help. So make sure you book a call from the link in the description down below so that we can strategize smart real estate moves together. Now, let's dive into the numbers. Let's dive right into the market report for the month of October. I'm going to read over some of the highlights for the past month. Don't worry, I'm not going to read over the whole thing. And I'm going to go over some of the key figures as well. So, Greater Toronto Area home sales increased strongly year over year in October 2024. Over the same period, new listings were up, but by a lesser annual rate. The result was tighter market conditions compared to October 2023, which I'll go over later in the video, so stay tuned for that. And the average selling price was up slightly on an annual basis. While we are still early in the Bank of Canada rate cutting cycle, it definitely does appear that an increasing number of buyers moved off the sidelines and back into the marketplace in October. The positive affordability picture brought about by lower borrowing costs and relatively flat home prices, prompted the improvement in market activity, said Toronto Regional Real Estate Board President Jennifer Pierce. So this kind of gives an overview of what has been happening for the past month. And if we look at some of the key figures, this will be more. So here are the key figures that I was talking about. As we can see, the number of sales shot up by about 44% from October 2023 to October 2024. There wasn't much of a change in the average sales price. There was only about 1%, 1.1% change over the same time period. I'm going to go over that in a little bit as well as the new listings only going up by about 4.3%. Now, because there was only a small 4.4% change in the number of new listings and the sales shot up by 44%, this is what the report was talking about initially when it said there were tightening conditions in the month of October. As far as the average price goes, now the small change of about 1% year over year is almost expected because while there was an increase in the number of sales, this didn't directly correlate to a change in price. And this is something that we are probably going to see for the next few months, where if the number of sales continues to go up and we see buyers coming back into the market, we're going to see buyers first buy up the existing inventory in the market. And because those properties have been sitting on the market for a while, they're probably going to be sold at or maybe slightly here or there around their market value. So as far as price going up, average prices will take some time to go up, but we've started to see the first indicators of a more active market, of more buyers coming in, with the number of sales shooting up at the rate that they did for the past month. Now let's look at the sales by price range and house type. This table tells us the number of sales that happened in each housing category as well as the price at which they sold. So the detached category saw a total number of sales of 3,139 homes sold at an average price of $1.46 million. And the share of total sales for the detached category was 47.1%, which tells us that detached homes continue to be the most popular product in the Toronto market. If we look at the average price, we can see that about 47% of all sales happen in the $1 million plus range. So this total over here of $1 million plus was about 3,000 plus sales. And out of 6,658 homes sold, that tells us that nearly half of all those homes sold at an average price of over $1 million. So in summary, this table tells us that Toronto buyers are still willing to pay a premium price to get a detached. Now let's take a look at the key figures in a little bit more detail so we understand how they've been trending, starting with sales. So by now we know that there was an increase of about 44% in year-over-year sales from October 2023 to 2024. And while that's a year-over-year change, which is a slightly or relatively longer period, if we look at just the calendar year of 2024, October 2024 is significant because as compared to the past few months, it has seen a jump in number of sales in even the shorter term. So if we look at September or just last month, the number of sales were just under 5,000, while in October 2024, we saw over 6,600 sales. And that's a jump of about 33% over a period of a month. In addition to that, October 2024 was the highest number of sales in the calendar year of 2024, except for the month of April and May. So that tells us that this these decreases in the interest rates are starting to take their effect, and we'll have to see if the this current month of November sees an uptick in from that number, or if we see a more conservative, change, or maybe even just a flattening of the number of sales from October. Moving on to the new listings, we know that there was an increase of about 4.3% in year over year new listings from October 2023 to 2024. And when the sales jumped about by about 44%, we discussed about the tightening conditions in the month of October. But if we look at the shorter term, so if we look at September 2024 versus October 2024, we actually saw that there was a significant decrease in the number of new listings. And that emphasizes even more the short term tightening conditions. So when we say that there was a small increase from October 2023 to 2024, but from September 2024 to October 2024, which is the market that we're in right now, we're seeing that even fewer new listings had come up. So while sales shot up month over month by about 33%, like I discussed in the last graph, the number of new listings actually went down. So sales shoot up 33%, but new listings go down significantly. So that tells us that the conditions are a lot tighter than they look in a year over year picture. And that's why it's important to look at not only a larger picture, but also what is happening in sort of on the micro scale. So month over month. Next, let's look at the average price, which honestly hasn't seen much of a change whether you look at it year over year or over a shorter term. And even if you look at the whole calendar year of 2024, it's hovered somewhere around this 1.1 million mark for the average price. And I feel like it's going to stay that way for at least the next foreseeable future. Yeah, sure, we saw that there was an uptick in the demand in the last month, an uptick in the number of sales. But that doesn't translate directly to an increase in the price because, like I'd mentioned earlier, the existing inventory is what's going to get consumed first at or around market value. And to see an increase in the average price, we're going to have to consistently see a high number of sales, high demand, and of course, dropping interest rates. So I think this is pretty much par for the course for the next few months. And once we see those interest rates continue to come down significantly, maybe next year where we're seeing perhaps, rates of around high threes maybe, then we can comfortably assume that, yeah, prices might start to climb. How much they'll climb by and how quickly they'll climb is anyone's guess. But I don't think that we're going to see a significant change in price anytime soon. Last but not least, my favorite metric, which is the sales to new listings ratio, or the SNLR. Now, the reason why I love this metric so much is because it's almost like a direct comparison between the demand, represented by the number of sales, to the supply, which is represented by the number of new listings. And if we look at this number year over year, we can see that there was a significant jump from October 2023 to 2024, which makes sense because we saw that there was a jump of about 44% in the number of sales over that time period, while the new listings went up only by about 4%. But the reason why I don't like to look at the sales to new listings ratio over a longer term, like a year over year period, is because there could be other factors at play that contribute to an increase like this. So you could say that, in October 2023, we saw higher interest rates. And right now, we've seen that there's been a few cuts in the past few months. So, of course, October 2024 would see an uptick in the number of sales, and as a result, an uptick in the sales to new listings ratio. But if we compare it over a shorter term, so if we look at it, say, for example, as compared to September 2024, it gives us a better idea because the market conditions are similar, where September also saw some interest rate cuts, and it gives us an idea of what over the shorter term things have how the markets has looked in the past, and use that to predict what it might look like in the coming few months. So if we compare it to September 2024, we can see that actually, looking at this graph, September 2024 had the lowest sales to new listings ratio in all the past 4 years. And if we compare it to October 2024, of course, we see this kind of jump, which is a significant increase. And that tells us that these interest rate cuts that we've been seeing since June are starting to take their effect, and slowly but surely, demand is starting to pick back up, at least in the short term. As I mentioned before, I don't think that's going to translate to an increase in price anytime soon, but if the interest rate cuts continue, and if the if the number of sales continue in the trajectory that they have, we're going to start seeing the demand start to climb, which could lead to an increase in price. And actually, there's another graph that shows the correlation between average price and the sales to new listings ratio, which I will show you next. So this is the graph I was just talking about, comparing the sales to new listings ratio by the average price growth. So the blue line is the sales to new listings ratio, and the orange is the average price annual percent change. As you can see, that when we've seen typically, because these are trend lines, when you see a general trend of the sales to new listings ratio going up, we also see a similar increase in the average annual percent price change. So it kind of tells us that as the sales to new listings ratio goes up, we see a correlated or corresponding change in the average price as well. And there you have it. That concludes an overview of the Toronto real estate market report for the month of October. As you can see, lots of dynamic changes, sales shooting up due to consistent rate cuts, especially the 50 basis point rate cut that happened in October. And we're rumored to have another potential 50 basis point rate cut in the December announcement as well. Now, obviously, we don't know if that's going to happen, but if it does, it's going to create a very interesting set of conditions, because December is actually a more quiet time in the real estate market due to the holiday season. So let's see what happens, but whatever does happen, we are geared for a very interesting start to 2025 in the January market. And as always, make sure you subscribe to stay up to date on the Toronto real estate market, and I will continue to deliver transparent and honest real estate advice to you so you can make the best decision for you and your family. Thanks, and I'll see you in the next one.